Together we stand, united we fall. Good morning and welcome everybody to the Crypto Mining Show, your one-stop shop for all cryptocurrency news from the perspective of a cryptocurrency miner. I go by Blind Run on the internet and Matthew in real life. Today we have a new launch from NB Miner. It's version 41.3, which should obviously be focused around the 100% light hash rate unlock. We have CIFR Mining raising the 2022 hash rate forecast for Bitcoin. We have basically a $3.5 billion bet on Bitcoin becoming the reserve currency for crypto is being put to the test. It failed. We're going to talk about that. That is essentially referencing Terra, Luna, and the stablecoin UST. If you guys haven't been following that, it's been pretty intense. In an opinion piece from AMB Crypto saying miners are migrating from Bitcoin to Ethereum because weird. After that, we'll be getting into our daily mining profitability. I have been at the farm pretty much since the week has started. So like 10 hours yesterday. I am trying to get more efficient, replacing pads, cleaning up all the rigs. I have a lot of work to get to. So that's pretty much what I'm going to be doing the whole week. Let's get into it right after a word from the official sponsor for the Crypto Mining Show. Today's sponsor is Crypto.com. Crypto.com is my go-to centralized exchange for liquidating my crypto assets. With their Crypto.com Visa debit card, I can load up my mined Ethereum to pay for power and other operating costs quickly while earning up to 8% cash back. In addition to the Visa debit card, there are additional fiat options including wire transfers to easily receive your profits. Crypto.com also offers additional services including trading and even staking to earn additional revenue on your investments. Join 10 million plus users buying and selling 100 plus cryptocurrencies at true cost by using my affiliate link in the description for a $25 funding bonus. Or enter referral code SOAT at sign up for the same bonus. Remember, cryptocurrency investment comes with significant risks, so do your own research. Welcome back, and I want to thank everybody for finally breaking 178,000 subscribers on YouTube. We were slowing down there for a little bit, and it's picking back up. I don't know what happened. I guess everybody got back to work and needs something to watch at work. I don't know. Anyways, let's get into the first announcement for today. It's going to be NB Miner releasing version 41.3. And it was released 8 hours ago. Here are the fixes. ETH Hash improved stability of the light hash rate unlocker. They fixed the crash on AMD GPUs in mixed rigs, I'm assuming maybe are more compatible and friendly now. That'll have to be tested. They improved the compatibility on rigs with small system memory. And then here's a note. The recommended drivers are 512.15 for Windows and 510.6 for Linux. They do have links to the faster downloads in case it is getting bottlenecked on the main downloads. Now, it's also important to note that T-Rex does have their beta ready. We'll have to see, when they do an official launch on their GitHub, of course, but you can go ahead and get T-Rex up and running. So if that's what you prefer, go for it. Of course, when you're starting to hunt for stability, etc., don't get too attached to any one particular miner because I'm sure there's going to be a lot to be tested here in the coming weeks. LOL miner's probably going to reverse engineer it. G miner's probably going to reverse engineer it. We're probably going to see a huge flood of 100% light hash rate unlock options. And you never know which one's going to end up coming out on top because every time it does feel like it's a little bit different. Let's go ahead and get into CIFR Mining raising the 2022 hash rate forecast by basically half an exahash. The firm attributed the increased hash rate guidance to improve machine allocation from rig maker MicroBT. Bitcoin miner CIFR Mining increased its expectations for the total hash rate capacity for the remainder of the year by 0.5 exahash a second, according to a Tuesday filing with the U.S. Securities Exchange Commission. In its annual earnings report for 2021, CIFR Mining had said it expected to deploy a total of 8.5 exahash a second, with 7.2 exahash a second going to its self-mining operations by the end of 2022. The miner now expects 9 exahash a second in total hash rate, 7.5 exahash a second of which will go towards its own mining operations. The increased hash rate is due to the improved machine allocation from MicroBT, according to the filing. The firm has contracts for 27,000 rigs with Bitmain and 60,000 rigs from MicroBT. CEO Tyler Page said in a Tuesday's analyst call. CIFR is, quote, having conversations, end quote, with virtually every mining rig manufacturer, including new entrants like Intel, Page said. At the same time, CIFR Mining reduced its expectations of power capacity. The firm expected to have 405 megawatts of total capacity by the end of 2022, 305 megawatts of which would go towards its self-mining operations, but now has updated its forecast to 345 megawatts, with 275 megawatts used for self-mining, the filing said. The filing shows that phase 2 of development for CIFR Mining's Bear and Chief facilities has been pushed back to 2023. However, the CEO said in Tuesday's call that the electricity capacity is more than enough to host machines scheduled for delivery throughout the year. The facilities could accommodate more mining rigs should the firm find opportunity to buy them at competitive pricing, he said. CIFR Mining closed its first loan to finance the purchase of equipment, it said earlier in May, securing $46.9 million US for its Alborz facility from BlockFi. The firm believes lenders are and will continue to, quote, be comfortable, end quote, with CIFR Mining's model, given its low costs, despite unfavorable market conditions, Page said. Given its current contracts, the firm anticipates its cost of electricity to be 2.7 cents per kilowatt hour and the cost of machines to be $45.01 per terahash, according to the filing. This is actually super important to keep note of right now. What are they currently purchasing, Bitcoin miners for, so you have an idea what you should be purchasing Bitcoin miners for. Now, obviously, as a home miner or even a smaller miner in general, you typically aren't going to get the premium price, but it's important to note that it's around $45 and a penny. And if you look at pretty much anything on the market right now for ASIC miners, it's way above that going to the individuals. And I'd advise you to basically start lowering your cost per terahash on Bitcoin miners when looking to purchase them. And I wouldn't, say that you're going to find $45 because you're probably going to, or per terahash, because you're probably going to be buying a lot less units. But if that's the strategy of the big guys, that's the strategy of the big guys. Also, obviously their power cost is insanely low. It's going to be really competitive in Bitcoin. The firm believes lenders are willing to continue to be comfortable with the model. We got past that part. The shares of CIFR were down about 22% on Tuesday, while mining peers have recovered from a brutal sell-off and are up anywhere between 4 to 5% on average. Meanwhile, Bitcoin finally caught some bid and rose above 31,000. It's at 31,000 right now. Last night I saw it go above, of course, 32,000. Ethereum right now is at 26.30 or 23.63 in price. So obviously that's going to hurt the Ethereum mining. Just once again, it's important to note from my perspective what they're paying for these particular rigs, and to take note when you're making your own purchases. $45 per terahash is what a large farm is paying for. Usually you don't get those numbers from larger firms, so it's kind of nice to see those numbers, unless of course you're like working with them directly, etc. So in a public article, garnering that information and seeing what their kind of cost basis is super enlightening in my humble opinion. So I was glad to see that. Now, this is going to be a big one to tackle, boys, and it's a $3.5 billion bet on Bitcoin becoming a reserve currency. This is really surrounding UST, essentially, and I'll pull this up on CoinMarketCap. What we saw was essentially a huge dip in a stable coin called Terra USD, which its short was UST. And part of the reason is because this is one of the stable coins that is not backed by the US dollar. It's manipulated by essentially an algorithm that also, unfortunately, affects Luna as well. And so this is important to understand, because what ends up happening is when you have to recover one, you have to basically take from the other. So Luna has to essentially kind of be burned in a fashion. We'll be going over it in the article, which means that now not only do you have a stable coin that went severely below the US dollar peg, but then it affects the price of Luna, which is essentially the coin behind that. So if we took a look right at UST, you end up having basically down to 91 cents when it should be at $1 if it's a stable coin. Yesterday, it broke down all the way to 68 cents at its low, which is incredibly difficult, right? But you can see here, Terra is down 50% as well. So why did that happen? Let's get into it. All right, so a crypto project, Terra, is buying billions in Bitcoin to support UST, a controversial stablecoin. Its creator, Do Kwon, believes Bitcoin can become the, quote, reserve currency of the Terra ecosystem. That belief is being put to the test as UST falls below its $1 peg. A multi-billion-dollar bet that Bitcoin can act as a reserve currency for the crypto economy is already being tested as UST. A controversial stablecoin struggles to maintain its $1 peg. UST dropped close to 99 cents over the weekend, fueling fears of a potential bank run that could force Terra, the project behind it, to dip into a $3.5 billion pile of Bitcoin to support the token. Now the Luna Foundation Guard, an organization created by Terra's inventor Do Kwon, says it will lend out $750 million in Bitcoin to trading firms to hold UST's price peg. But that's done little to assuage investors' concerns about the implications for Bitcoin. What is UST? Developed by Singapore-based Terraform Labs, UST is what's known as an algorithmic stablecoin. It aims to carry out the function of stablecoins like Tether, which track the price of the US dollar, but without any actual cash held in a reserve in a reserve to back it. And that's the important part to note. Just from the face of things, right? You don't actually have something that's backed by the US dollar. They don't have a reserve set aside, which is a little outside of, how a lot of other stable coins work. Instead, UST, or Terra USD, is created by destroying a sister token known as Luna, using smart contracts, lines of code written into the blockchain. Quote, if you've got, say, $405 and you burn one Luna, you should be able to mint 405 of the UST stablecoin end quote. Carol Alexander, professor of finance at the University of Sussex, explains. The same applies vice versa. New Luna is minted by burning UST and other algorithmic stablecoins that Terra supports. Terra's protocols also feature an arbitrage mechanism where investors can exploit deviating prices in each of the tokens. For example, too much demand for UST may result in its price topping $1. That means traders can convert $1 worth of Luna into UST and pocket the difference as profit. The model is designed to even out supply and demand for UST. When the price of UST is too high, users are incentivized to burn Luna and create new UST, increasing the stablecoin supply while also decreasing the amount of Luna in circulation. Quote, the Luna becomes more scarce, which makes it more valuable, transferring that value into UST, end quote, Alexander says. Now, I've never really been a huge fan of this entire kind of process of burning something to manipulate the price. And as we saw, of course, with Ethereum, in the problem with Ethereum part 2, is all that really does prove is that you can make deflationary a bad thing as well. And it appears that we are seeing that play out with UST and Terra as well, in my humble opinion. When UST's price is too low, the reserve happens. UST gets burned and Luna is minted. That should, in theory, help stabilize prices. But here's the problem. This assumes normal market conditions, said David Marino, a research analyst at Crypto Compare. Quote, during periods of high volatility and one-sided buy-sell activity for UST, the above stabilizer may not be sufficient to maintain the peg in the short term, end quote. There have been multiple instances where UST is decoupled from its $1 peg, raising concerns about the viability of its economic model, particularly in a situation when several people try to redeem their tokens at once. And here the funny part about that, of course, is what happens when, of course, the price starts taking a dive. Well, a lot of people start performing this, which means you see that huge dip like we saw, right? The latest challenge arrived over the weekend. Something fell. Over the weekend, hundreds of millions of UST was sold on Anchor, Terra's flagship lending platform, as well as Curve and Binance, resulting in accusations of a, quote, coordinated attack, end quote, on the stablecoin. Quote, men will literally attack a stablecoin unsuccessfully instead of going to therapy, end quote, Do Kwon, the South Korean crypto entrepreneur who co-founded Terraform Labs, said in a since deleted tweet. Yeah, that's a bad take, bro. How about just get the math right? I'm just saying. Just you could get the math right. I think that was a rough tweet. Probably a good idea to go ahead and delete that one. Reserve currency. To address concerns over the sustainability of the stablecoin, Kwon plans to buy up to $10 billion worth of Bitcoin through a nonprofit called the Luna Foundation Guard. These funds would provide a backstop in case of dramatic fall in the value of UST. So it sounds like to me the algorithm didn't work, so they kind of backpedal and now they have some sort of backup or reserve currency to base that off of, which is kind of funny. It seems like to me, just from my perspective, how it was supposed to function without it being backed specifically by the US dollar is not the way it's going to function now. Yes, they're buying Bitcoin to back it, sort of, but it's the value there that's needed, right? So it's kind of odd. The idea is that Bitcoin would act as the reserve currency for the Terra ecosystem, similarly to how central banks hold large quantities of dollars in their foreign exchange reserves. LFG bought another $1.5 billion in Bitcoin last week, taking its total reserves to about $3.5 billion US dollars. However, on Monday, the organization said it is taking steps to, quote, proactively defend the stability, end quote, of UST. That includes lending $750 million worth of Bitcoin to trading firms to protect the UST peg, and further $750 million in UST being lent out to buy more Bitcoin, quote, as market conditions normalize, end quote. Quote, in case of most of these algo stablecoins, we have seen that the teams behind the project usually need to step in. So these are not fully decentralized or managed independently yet, end quote, said Vijay Ayar, head of corporate development and international at crypto exchange Luno. And that's obviously been a problem with stablecoins since the beginning, which is that argument or that debate between centralization and decentralization and needing centralization for the reserve currency for, of course, stablecoins. And I think, at least from my perspective, part of the reason why Luna was going to be built this way was to go further or closer, or at least be able to advertise closer to what would be a more decentralized stablecoin. But it doesn't seem like it's really possible for that to be a thing. But that makes sense because you are essentially trying to peg it to what is a centralized currency, right? So it's a problem with stable coins in general, I think. And, you know, eventually I would hope you get away from stable coins completely. Personally, that's the idealistic future goal, right? Your stable coin would be Satoshis or Sats. It wouldn't be something pegged to an external currency that's not on chain, right? Investors are worried that UST's Bitcoin underpinning will result in further pain for the cryptocurrency. The world's largest digital coin dropped below 33,000 US dollars on Monday, slumping to its lowest level since July of 2021. It was trading at about $32,921, down 6% in the last 24 hours. LFG's intervention, quote, will add to the selling pressure, end quote, said Derek Lim, head of crypto insights at Bybit Exchange. Quote, BTC will likely go lower before it bounces back when short sellers take profit, end quote. Quan insisted LFG is, quote, not trying to exit its Bitcoin position, end quote. So that's good. Quote, as markets recover, we plan to have the loan redeemed to us in Bitcoin, increasing the size of our total reserves, end quote, he said. The plan is to eventually allow UST holders to redeem their tokens in exchange for Bitcoin. Bitcoin would play the role normally taken by Luna in a crisis scenario. And I think that's also why you see this happening to Luna, right? The huge dump happening in Luna is partly because of the way they're changing this up. Previously, you would redeem the tokens for Luna, but now you can, in the future, redeem them for Bitcoin. It kind of hurts them from a certain perspective, right? But this is still weeks away from being implemented, and it's unclear how it would work in practice. The biggest risk moving forward would be another depegging of UST, forcing LFG to liquidate its Bitcoin holdings, said Hendo Verbeek, head of quantitative trading operations at Faculty Group. That could in turn result in further liquidations of, quote, over-leveraged buyers, according to Verbeek. Quote, this is a nightmare scenario which looks like a real outcome of events, end quote, he said. So that is what's going on with UST and Luna and the big crash. It is related to mining because it is one of the latest parallel assets for Flux, right? It was just added last week during the snapshot, so it's important to pay attention to it. And it would be pretty bad if they ended up liquidating themselves out of existence completely. It would also impact mining directly because we would lose a parallel asset. My question would be to Flux in general, by the way, what happens if one of the networks that a parallel asset runs on goes broke, right? What if it goes out of existence? What happens at that point to the Flux parallel asset? Now, if you're mining on something like Miner Pool where they do the conversion for you and then go ahead and pay out to your Flex wallet, that's probably the best option to protect you from that sort of scenario, but it won't fully protect you, because clearly if it has to get removed all the way, then it has to get removed all the way. It's just a question that gets brought up from my perspective for Flux and parallel assets, because you are essentially having some sort of reliance on other networks, and I think that it makes sense. All right, so miners are migrating from Bitcoin to Ethereum to mine because. Also, don't worry about guys in chat, boys. Bitcoin and Ethereum miners both have made a significant chunk in revenues over, I think he meant chunk, it's misspelled here. And by the way, I'm going to try to be as open-minded here with this article, but I think that there needs to probably be a lot more research done on this article, and we'll talk about why as we go through it. Both have made a significant chunk in revenues over the years as demand skyrocketed. However, 2022 might come as a surprise, especially for the largest cryptocurrency. January proved to be a tough month for Bitcoin miners. Miners generated approximately $1.2 billion in revenue during the first month of 2022. While the figures seem impressive, the total revenue for January went down by $220 million compared to December of 2021, a staggering 15% decrease in mining revenue. And remember, yesterday we talked about the huge decrease in revenue of some of these big miners and how they're reporting for Q1. It's definitely impacting them, right? We're also aware things that are changing within the Bitcoin mining markets is as opposed to creating more shares as a public company and offering those to the public because of the dip in the market conditions, a lot of these large miners are shifting from public share options and that sort of setup, those securities, and moving towards just borrowing from institutions, traditional financial institutions like banks and so on. While the figures seem impressive, we went over that. From Bitcoin to Ethereum, here's the journey. All right, explain it to me, bro. Bitcoin miners took a tumble in mining profitability during the month of April. However, Ethereum miners saw $224 million more revenue than Bitcoin miners. Here's the reason he says. Okay. We've been talking about this. There's a huge difference between Ethereum mining and Bitcoin mining right now. And that is that essentially Ethereum mining, up until the 100% light hash rate unlock that just happened, which is affecting network, right? Profitability or hash rate. But up until now, as well as the difficulty bomb, let's not forget that too, because that's going to be artificially increasing difficulty. So that's going to be skyrocketing as well here over the next couple months. Bitcoin mining is not following its traditional trajectory, which is following the price of Bitcoin. Bitcoin mining is going up no matter what. The difficulty on the network is going up no matter what. What does that translate into? That translates into reduced profits, okay? So just because, and on the flip side, Ethereum has not moved at all pretty much off of that 1 petahash bar. It hasn't really been going up. So it's important to note that that directly affects the amount of revenue. So because the difficulty is going up on Bitcoin, the revenue is going down, and these miners are still investing huge amounts of money into expanding even while the price of Bitcoin is going down. Ethereum, on the flip side, from my perspective, if I look at difficulty on the network since the beginning of the year, has remained pretty much the same. It's flat, right? People are not building more mining rigs for Ethereum. We are going to see, probably maybe a 5 to 10% increase in hash rate over this week, somewhere around there, due to, of course, the fact that we have the light hash rate 100% unlock, which is a little bit of an outlier case. But I don't necessarily see the amount of money being generated by mining Ethereum to actually to prove out that essentially Ethereum miners or Bitcoin miners are moving to Ethereum mining. But as per Yacht's graphical insight below, let's see what he says the reason is. At press time, Bitcoin miners witness a significant decline when compared to the previous year. In fact, April's revenue went down to $34 million by March 2022's value of approximately $1.21 billion US dollars. Investors rooted to gain at least the Bitcoin mining profits, but the Bitcoin network suffered drastically as Bitcoin mining difficulty spiked, touching 29.79 T. Overall, the profitability of Bitcoin over the past year went down 31% since April of 2021. Ethereum and the miners of the largest altcoin took this opportunity to race ahead. Mining Ethereum became even more profitable when the crypto toppled the $4,000 resistance back in 2021. And currently, with the upcoming merge, it has become increasingly difficult for Bitcoin to remain the crypto king. More and more miners migrated to the Ether network with these ongoing developments. Ethereum miners' revenue surpassed Bitcoin's because of the total number of coins earned was multiplied by the relatively higher Ethereum price than Bitcoin in April. But the chart he's showing here is the miner revenue monthly, and the chart you would want to be looking at is the hash rate. So this article is completely confusing, and I think like one of the reasons I wanted to bring it up is because I see a lot of holes in this argument, and maybe you guys should be aware of it because this is kind of what's getting sold to. By the way, this was sent to me by someone that has nothing to do with mining, and so I thought it was important to address. Ethereum miners recorded $1.39 billion in April's revenues, while Bitcoin miners took in around $1.16 billion US dollars. Unlike Bitcoin, Ethereum revenue increased by 3% from March. Overall, miners' revenue is dictated using the price of a cryptocurrency and the number of coins earned within a given period. To make the situation worse, Bitcoin miners have even sold a major chunk of their Bitcoins as the sell-off hit the market. So, there's their market position. They aren't tracking the difficulty on the network or the amount of hash rate on the network. They were purely basing it off of the revenue. So once again, the reason why this is flawed, and I'll just bring it up again, is because what we've seen traditionally now, or not traditionally, here we go. What we've seen traditionally with Bitcoin mining is that the amount of hash rate on the network would follow the price to a certain extent, or at least the pace at which the mining difficulty is increasing, or the amount of hash rate on the network is increasing. However, now that's not so much true. We have the difficulty and the amount of hash rate on Bitcoin increasing no matter what, regardless of price. Doesn't seem to be or appear to be slowing down whatsoever. And miners, large firms, and so on are finding different ways to fund the growth, even through, of course, these current market conditions. That is a good sign. That does mean that large companies have confidence within Bitcoin. It does mean that there is that potential of the traditional super cycle being broken to a certain extent, because this isn't what you would typically see in a bear market, right? Or running up to a bear market, you would start to see kind of the growth start to slow down in the hash rate of Bitcoin. But that's the reason this is flawed, is that essentially that increases the difficulty, which decreases the profitability. If anything, it would be proof, in my humble opinion, that Ethereum miners are moving to Bitcoin mining. If anything, it would be the complete opposite of what this article postures. The reason why Ethereum miners are making more money is because the growth of the network hash rate has slowed due to the threat of the merge. This can also be compounded and realized by the fact that GPUs have come down in price, while much quicker than ASICs. And ASICs should start coming down in price if we were to actually see this article prove out to be accurate. So hopefully that explains it and you guys are up to date. I thought it was very important to address again, primarily because it was brought to my attention by somebody that doesn't really participate as much within mining or at all. And basically that's what we do. We report on this stuff from the perspective of a miner so that you can get some insight on it. Okie doke. So mining profitability still low, of course. We didn't drop below yesterday. We're at 123 US dollars. Right now I have 3.97 gigahash in the real time, 4.2 reported, and the average over the past 24 hours is 4.17. That's because we have a kilohash on Flux already. And of course, as per the great hash rate migration, we will be also moving these off on Friday, March 13th at 9:45 a.m. We'll be doing that live here on the show. So tune back in on Friday because it could be a lot of fun. I did want to thank Svex for his donation of 93 mega hash a second. Thank you, good sir. That is awesome. And our payout was not as much, though. As you can see here, we dropped down on our payout to 0.049. Now, I was at the farm and I took a lot of rigs down yesterday. It's hard to see. I wish I could zoom out on this. I need to actually learn if I can. But I was down essentially on hash rate, replacing, refurbishing rigs. We will probably be doing it today as well. That's going to skew our numbers, but that does mean that we are getting we will essentially end up with more hash rate at the end of the day. So for example, we ended up with our reported being pretty close to what we were at yesterday. But I actually have a couple GPUs offline, a couple more GPUs offline, but the GPUs that are running are at a higher hash rate and a little bit more manageable. If you guys want to go over my strategy, I think I will be talking about my strategy here on cooling to get through the summer without all the ventilation that I need to get, or without all the ventilation that I will be getting at the new location, as well as the new power, which is going to be helpful. Obviously, with the profitability, it makes it very, very difficult to expand, etc. I think everybody's in the same boat. You know, it's at that point in mining where you have to make the decision. Are you going to continue to mine, or are you essentially going to liquidate and get out of mining and try to get back in on the next cycle? And I think the next cycle is going to be really, really hard to time because this one's been wackadoodle. It's all over the place, right? And I wouldn't posture that I would know for sure that it'll even happen in the same timeline that it normally does, meaning pegged to, of course, the halving of Bitcoin, which would be happening in around December of 2024, January of 2025. Probably market realization wouldn't be until 6 months or so after that, which would be around, June of 2025, somewhere around there. That would be the standard super cycle of the next huge pump. I can't even guarantee that that would be a thing, but some of the strategies, sometimes people will liquidate, use that chance to buy a whole bunch of newer cards at a lower price and get those prepped up for the next time. If you're going to continue to mine, you could still use that strategy of using this opportunity to trade out and kind of optimize your rigs, get newer cards, that sort of thing. But in addition to that, you need to be able to continue to expand. What are the Bitcoin miners now doing? Why do we talk about, hey, let's see what they're doing, right? They're paying now the $45 per terahash on Bitcoin miners, right? That's kind of their strategy there. They're continuing to expand though. And why do you have to continue to expand? Well, you have to continue to expand because you have to now cover more costs with less revenue. And the only way to compensate for that is to expand your farms. This is not financial advice. To be clear, I'm giving you the options. You can get out, or if you're going to continue, then your goal would be to expand. Let's look at, of course, the miner pool for Flux. We have about 1 kilohash a second still online. We're doing about 13.83 coins a day, which is down to $14.36 a day. But we also still get the parallel assets, which out of the 5 that are currently getting paid, we're getting an additional 5.39 coins at $5.59 a day. Technically, if we counted all of our parallel assets, we would get $10 or $11 a day in revenue from mining Flux. That being said, of course, I do still have the question, what happens if Luna just goes away? What happens to that parallel asset if it completely crashes out of existence? Because this is a scary dump. I mean, to anyone, I think, like That's a pretty scary dump. If we went to like the main page here, and then we just hit like the 7-day drop, you're talking about a 65% drop. It's 20% worse than, or 25% worse than the next biggest dropper, right? And that's kind of concerning, especially considering that the Terra USD hasn't recovered all the way yet to its peg. And their strategy now to take care of it, frankly, from the way I read the article, is completely going back on what their original intention of this type of stablecoin was going to be. I have some concerns with Terra. Okay? That's just the way it is. With Luna, with the Terra project, with the way this stablecoin works, I have some concerns. We also are still mining Varus coin, albeit just on 2 rigs. The rest are on either BTM or Darrow currently. Both of those are being mined solo on nodes at my farm. And I don't really have an API to pull that data for you guys. When I have time, I do want to build just a little like local, probably like dashboard for myself for some of these coins. And then I'm actually not mining Casper right now. My 1063 gigs I took offline while we're kind of cleaning everything up, and I'll probably get them cleaned up as well. Mining profitability, from what to mine, 10 cents a kilowatt hour, correcting the Zell hash on the 3090. What do we got? We got Ethereum under $3 a day at $2.91 a day. Cero at $2.10 a day. Nice hash mining to, of course, once again through for Flux on Nice Hash is more profitable than mining directly. It's at $1.82 a day. If you mine directly, it's only $1.50 a day, pretty disappointingly. However, it is important to note that you are stacking more parallel assets than just what they record on what to mine. So they will record the 5. We definitely have another 2 that are guaranteed. This should be starting to get paid out soon. That being said, of course, you will have another 3 after that will be coming, which kind of skews the way that's calculated. Conflux at $1.64 a day after power, Equilibrium at $1.72 a day after power, and Crypto Night GPU for Rio is at $1.60 a day after power. Ergo down here at $1.44 a day after power, and Ravencoin at $1.26 a day after power. Ethereum Classics really struggling at $1.13 a day after power. Let's go ahead and take a look at the different networks and see if anything is obvious here. We had a drop off of hash rate on the network from 238 exahash a second to 232 exahash a second. Maybe the article was correct. This is actually a surprising drop. I don't know exactly why it's dropping off. See if we can peg any specific pools. I'm not seeing it on an initial pool either, because a lot of these pools are actually going up. Here's a little dip on Binance. So Binance Bitcoin pool has dropped from 27 exahash to about 25 exahash. There's one of the drops. All right, let's take a look at Ethereum. Ethereum is at 1.09 petahash a second. I think we're starting to see, of course, the results of 100% light hash rate unlock on the network. It was sitting around 1.07 petahash a second. So that means that we've gotten about 200 terahash a second additional online. So that's important to note. Ethereum Classic, 26 terahash a second. Despite, of course, the price of it going down and the profitability of it going down, it is still remaining around that 20. In fact, it went up 1 terahash a second here. So that's an interesting one. Let's take a look at Flux. Flux is at 1.9 mega solutions a second, down from that 2.5 it was at for a while. I think yesterday we were still sitting around 2 mega solutions a second. It's at 1.9 now, so some people are moving off of Flux, it appears. Should look at Aeon too. This is the coin that Mr. Red Panda Mining is going to move to for the great Ethereum hash rate migration. It's at 366.76 kilosolutions a second. It's important to note too, this one doesn't pop up on the calculators properly because it has it queued in for, I think it was like a 55% fee, which is incorrect. Anyways, just a note on that. Ergo 15.56 terahash a second, no change from yesterday. We have had a slight drop in difficulty though. And Ravencoin, I don't expect much of a change in Ravencoin either. 2.95 terahash a second. Let's look at mining pool profitability for the past 90 days. Flex pool in first, mining pool hub in second, F2 pool in third. Last 60 days, flex pool in first, F2 pool in second, mining pool hub in third. Last 30 days, mining pool hub in first, F2 pool in second, crazy pool in third. Last 21 days, mining pool hub in first, F2 pool in second, ether mine in third. Last 14 days, mining pool hub in first, F2 pool in second, ether mine in third. Last 7 days, ether mine in first, F2 pool in second, nano pool in third. For the last 3 days, ZET in first, ether mine in second, crazy pool in third. And for the last day, we have crazy pool in first, ether mine in second, ZET in third. ASIC mining profitability, Kadena is still down $45 a day on the KD6. That's pretty rough if you paid $60,000 back in the day for one of those. The L7 is really holding kind of strong with the rest of the market. $35 a day, almost $36 a day on Doge alone. If you combine that with, of course, the merge mining of Litecoin, you could get even closer to the $40, which means it really hasn't dipped down that much in comparison to the rest of the ASIC miners. It seems to be the one that's holding its weight the most, is the L7, is basically my point. KD5 is at $30 a day after power. If we scroll down here to the Antminer S9, or S19 Pro, excuse me, it's under $10 a day. And that's for the 110 terahash model. I presume this continues to be, look, the margins are getting super tight on the Bitcoin ASICs. And once again, I think that proves the article incorrect as we talk about it. All right. So sales, we have the KD box. Has gone down in price to $5,700 US on BT miners. Use the affiliate link down below if you're interested in purchasing one. The S19J Pro, which is a 100 terahash model, at $8,000. S19 Pro is still $8,890. The V1 Mini is still $1,700. Most of these have all stayed the same, including, of course, the Silicon A10. So the only new sale is on the KD box over here. Ethereum network, ETH stats still seems to be kind of breaking. We aren't getting the average like updates on the network hash rate, but we kind of saw that we're already seeing an increase in that. Let's get into questions and answers. Remember, super chats are never required, always appreciated. The first to get read. We got one already coming from Johnny. Thank you for the $19.99 super chat. Says, thanks for doing this show. I appreciate your point of view. I know light hash rate unlock is the news of the time, but if you want a couple modded A2000s to test on algos other than ETH, hit me up. I do have an A2000. I'll hit you up. I have questions on essentially what you're modding and how you're doing it. And then we'll go from there. That sounds fun. I'm down, bro. Let me copy that out so that I don't lose it and add it into my notes. And pop it. All right. Chat's popped out, and let's get into questions and answers. All right, so John 4.0 says, not much of a question, but a statement, I think. At Son of a Tech, I would say, because this isn't a typical bear market, Bitcoin is oversold relative to historical volatility. This is more just a bunch of over leveraging and shorting. Alex Dewis says, at Son of a Tech, how is the heat impacting you? It was impacting me pretty bad, but I've made some modifications, and getting all the cards cleaned up is helping significantly. Tim L says, at Son of a Tech, here's a question. Do you think Flux got hammered yesterday more than other proof of work coins because of its recent news of adding Flux Luna parallel asset, Luna being toxic right now? Yes, I do think it's directly related. Yep. I think that is why that proof of work coin got hit more than other proof of work coins. I prefer Pi. Nice name. Thanks for the $9.99 super chat. Let me know if you had a question that went along with that. All right. Maddie K says, can you please explain the payout of parallel asset payments for miner pool? Yeah, they make it the most simple. So as you can see in the dashboard, what you got is your main payout, which is your estimated rewards right here. That's just going to be regular Flux, like your Flux block reward, right? During that time, you earn basically 10 parallel assets. If the parallel asset listed here is blue, that will be paid out every Thursday. Miner pool itself will do the conversion from the parallel asset, which is essentially a wrapped token on another network, whether that be Cadena, Ethereum, Binance Smart Chain, Tron, or Solana. And after they do that conversion for you, they will pay it out to you in regular Flux on the primary Flux network. If it is yellow, that means that we have the announcement, you are earning it, but it has not been activated for payouts yet. It just essentially means we know which parallel assets they're going to be, AVIX and Luna, for example. If they are red, there are 3 more parallel assets that will be listed, right? However, these are not ready or announced, so we do not know what they are, and we do not know when they will be added to the network, and we do not know when you will begin to get payouts. However, you will get this additional, in my case, 17 per these 3 parallel assets when they are added to the network. Hopefully that clears that up. And once again, a parallel asset, all it is think of it as a wrapped tokenized version of Flux on another network, whether that be Ethereum, so on and so forth. Hit that like button, boys. Pay Me in Crypto says, at Son of a Tech, I think it would be great if Terra fails and they remove the PA, replace it with something like a Litecoin PA. Litecoin doesn't have tokenized assets, so that wouldn't be something that I think you could do. Ergo. Ooh. Let's do Ergo, bro. Let's do Ergo, dude. At least Cardano. Cardano would be huge. Pay Me in Crypto says, at Son of a Tech, is the Bored Ape Mutant Ape project on Ethereum Classic from Yuga Labs, or it's a knockoff? It's a knockoff. Texas A says, at Son of a Tech, NB Miner just released beta 41.4 that unlocks 90% on the 3050 and 3080 12 gigabyte with 27 megahash a second and 100 megahash a second respectively. Bro. NB Miner? I had 9 hours ago. I see 41.3. Where is 41.4? Is it on their Discord? Dude, I can't get a break, guys. They're making me work too hard. Son of a biscuit. Thanks for letting me know. I'll look into it. Oh. All right, we have the 3050 back here, so we'll check it out later. I think that'll be what we do. I think we crashed it though. Crypto Raz says, Ask Simon Tech, I'm not asking for financial advice at all, but what do you think about supporting these Bitcoin mining companies like Argo and investing in them as well as Bitcoin directly? So from my perspective, I talked about this before, you're better off just buying Bitcoin. Why is that? Because no matter what, all of these outside Bitcoin mining operations or crypto companies that are formed that basically sell the security to you still have the major flaw of following the price of Bitcoin. So essentially all you do is expose yourself to more risk. Now, as opposed to just exposing yourself to the risk of Bitcoin, you also are exposing yourself to the risk of said company. Now, some people could say it's better because that company may be able to protect you from some of the Bitcoin volatility, but that's never proven to be true. It pretty much always proves out to be true that they have issues and you go down and up with Bitcoin. And then on top of that, you have to worry about the company being successful. In my humble opinion, just get Bitcoin directly. Not financial advice, but if we're comparing the two, apples to orange, it's kind of apples to oranges, but at the same time, you're exposing that risk. You have additional risk, in my humble opinion. Anonymous Miner says, Ask Simon Tech, I'm getting close to maxing out my power. Should I look at upgrading my cards and selling them, or wait till the market settles and check my ROI then? Maxing out my power, should I upgrading my cards and selling them, or wait till the market settles and check my ROI then? Yeah, I mean, I think it's kind of hard, right? You're going to need more power. Like I said, we go back to that whole entire, the kind of postulation of like, should you get ready or should you just liquidate and get out, or should you expand? And then what's going to help you expand faster? Probably upgrading power is going to help you expand faster, because then you're going to have that available power. I'd lean towards getting power set up or maxing your power up first, right? Especially because now the used market for cards is low. Now, if we were a couple months back and you're looking at doing it, then maybe you're selling the cards off so that you can get higher prices, right? But hindsight's 2020, and it's hard to time all that as well. KNDK says, hi, at Son of a Tech. As an xCloud migrator, do you think Flux is able to set up a cloud service that can compete with established services? This is a good question. We've talked about it a lot on the channel before. I think that there are certain applications that will migrate very well to Flux, but there are a lot that will not. And one of the biggest problems, of course, with Web 3.0 that I'll point out is persistent storage. So a lot of those services that are traditionally being used on where we sit right now, on traditional infrastructure and so on, that require persistent storage are way, way, way off down the line before it's feasible. So you end up in a position, just like you did from on-premises infrastructure to the cloud, you end up in a position where there will need to be some sort of hybrid configurations. I think one of the moves that Flux can do to really kind of help there is start to come out with, hybrid tools that will essentially allow organizations and people to develop onto Web 3.0 with certain pieces of their software, but still remain either on-prem or within Web 2.0, within cloud infrastructure there. And that's kind of where we're at. But once again, just always remember, the big problem is going to be persistent storage. Raymond says, Ask Simon Tech, what light hash rate 30 series card will you now buy for your farm, the 3080 Ti? So I think that the 3070 Ti would be the best in my testing. I know there's some debate surrounding that. I know that the 3070s are, a strong contender as well. I just kind of like the 3070 Ti. I think the 200 watts for the 83 mega hash a second is pretty fantastic. 3080 Ti really sucking a little too much power. However, if we were talking pure density, then the 3080 Ti is king. Density meaning most amount of hash rate for the smallest size farm, and you don't have to essentially have as many cards as you would for a 3070 Ti. That being said, the best I could really tune that in on a 120 volt circuit through a gold rated power supply was 340 watts. That's pretty significant bump. You're getting essentially about 40 more mega hash a second for about 150 more watts, somewhere around there. So density 3080 Ti, straight up 3070 Ti, that sort of thing. Alex Dewey says, Ask Scientific, speaking of heat, what is your max mem temp for cards? It is dependent on the type of memory in the card. A hard and fast on that would be GDDR6 at 106 degrees Celsius before it starts throttling. And 3000 series GDDR6X or GDDR6X in general is spec'd for 110 degrees Celsius before throttling. That doesn't mean that you want to run them at that temperature. These are the specifications. These are the temperature points at which your mining capabilities are affected, meaning your hash rate will go down when your memory modules hit that temperature. Mehmet says, Ask Scientific, can you mine Flux directly without going through a pool? Yeah, you can build your own node and do solo. I believe you can also do solo on miner pool and 2 miners. You'll pay them a fee though to go through there, right? Lord Beer says, Ask Scientific, will the S19 XP come out anytime soon? I have no idea. Samuel Lopez says, Ask Scientific, what do you think about strong nodes? Is it worth it? I'm not a huge node fan, just in general. I've talked about this before. Part of the problem is you're locked into a single coin, so you live or die on that hill. IATG says, Ask Scientific, if you had to use a stable coin, which one would you choose? That's an interesting question. The only one that I really use, that I've used in the past, is ones that are needed for any given exchange. Most commonly, they typically are Tether, so USDT. So that's usually what I end up on, because that's what's needed for any given exchange. It usually don't sit on USDT for very long. It's usually going into something else, probably like, for example, if the smaller exchange has USDT pairings, I'll swap for USDT, send it to that exchange, swap it for the coin I want, and take that coin out. I prefer Pi says, Ask Scientific, thanks for the awesome channel. Thanks for watching and the support. Jimmy says, Ask Scientific, would you be able to make a guide on how to mine Flux and the parallel asset on Simple Miner OS? Guide on how to mine Flux and the parallel assets. Well, the parallel assets are going to get paid out through miner pool no matter what. You would have to figure out the parallel assets if you were going to build your own node to mine to or mine solo, right? Unless you're just mining solo. Once again, the miner pool are 2 miners, and then they're going to take care of that. Texas Ace says, Ask Scientific, it's in the Discord. Thanks. I have it pulled up. John 4.0 says, Ask Scientific, is there any danger in your opinion of USDT having the same problem as UST? So I'd have to look into it. I do not think so, because USDT or Tether is, here we go. Maybe this article will do it. All right, let's do this. Hopefully this will help. So what is USDT? Tether, created by Tether Limited, is the world's leading stablecoin by market capitalization. It is a digital currency tied to the US dollar to keep its value stable. USDT was designed to be a 1-to-1 peg of the US dollar. This means that while the price of other crypto assets fluctuates, it stands around $1 US. Here's the chains it runs on: Ethereum, Algo, EOS, Solana, Tron, and more. Tether can interface with these blockchains to allow issuance and redemption. The leading stablecoin is backed by cash reserves, and that's the big difference. Cash reserves, okay? So when we compare that to UST is not backed by cash reserves. Basically, Luna was supposed to be Terra's reserve asset. So it was backed by a cryptocurrency that is fluctuating. However, they were supposed to have an algorithm that adjusted it. What we were just reading about, to be clear too, is now, as opposed to using Terra as the reserve, they will be using Bitcoin as the reserve, which to me already says they've failed to a certain extent. But that's kind of the crux of the issue, and that's the difference. So USDT or Tether, how it falls out of the peg to the dollar, would have to be tied directly to however many dollars they have in the reserve currency. If they let that fall, then you would be in trouble. But in general, no, USDT could not have a similar situation to UST. Retro Mike says Asamatech beta release, so it's on Discord only. Yep, got it. Al Chang says Asamatech, wondering if you heard anything or thoughts about Firo incorporated into iNodes sharing. No, I haven't. Andy Simpson says Asamatech 6x50 launched today, or 60x50 XT launched today. Which one do you like most? Is that really happening right now? 6750 XT I think is the one that I wanted, but I didn't know that that was actually happening today. Yep, okay. I had checked this morning. Oh, okay. I guess that makes sense. Can you buy them anywhere yet, though, is the question. They're saying the 6950 XT will be $1,099. That's a pretty good price. What are we looking at prices? We're looking at a 6750 XT at $549 and the 6650 XT at $399. The reason I decided I didn't really care too much for the 6650 XT was the memory got gimped down to 17.5 gigabits per second. There's an argument for this one on Flux, though, especially with the core, and an argument for it on like Ravencoin, right? Potentially. But right here, 550, 18 gigabit per second memory speed. That's probably what I'd be looking at. I don't think there's much of a reason to get the 6950 XT necessarily over the 6900 XT. Well, I mean, you do get the faster memory, but we'll have to see. I don't see where you can buy it quite yet, though. Available now, May 10th. Okay, available May 10th. Where are they available at? Can we purchase these on Newegg now? Or Best Buy? I see it here. See availability. Back order on the 6750 XT. Oh, they're all going to be on back order, huh? Out of stock on that one. You can get the 6650 XT here. Ah, I got to sign in. Come on, bro. All right, I'm trying to get one ordered. Man, does this mean I need to go to... Hold on. I don't have time to go to Micro Center. Oops, typed that in wrong. PC parts, graphics cards. Oh, lordy. AMD. $66.50 XT. They got them in stock. Son of a biscuit. Son of a biscuit. All right. That's fine. I guess we're driving to Houston. Thanks for the reminder. Holy moly. I can't afford a 6950 XT right now. I got to pay power, bro. Someone says, didn't you hate the 3070 Ti last week, Mike Billings? Things change. What can I say? That's the entire nature. Also, hate's a strong word, but it wasn't that good. Can you mind? Okay, we answered that already. They're in store at Micro Center now, which means I need to drive to Micro Center. Blue Dragon says the 67, maybe it's better to go to just AMD.com and order, huh? That's a good point. Then I could still work at the farm today. Which one should we test? I think we get the 6750 XT. That's the one I think we get. Yeah. Yay, we get another Xbox Game Pass. Woohoo. All right. I'm going to get going and get this ordered now. Thanks, everybody, for hanging out today. Be sure to hit the like, comment, subscribe down below. I'm going to get us a 6750 XT for testing on the channel. I'll see if I can get some others as well. And then we'll go from there. Detroit says, check Twitter DM. Cool. Thanks. Will do. Yeah, and I know Micro Center Houston has them. I'm debating driving down there. I am. But I might just order online. I'll see you next Tuesday. And we got to test the 3050. Guys. I need an assistant. Real bad. I'm not buying a 6950. I don't have $1,000. I literally don't even have $1,000. All right? I don't have it. Come on. YouTube makes $4,000 a month. I got to pay my bills. All right. I'll see you next Tuesday. It's too much work. All right. We're going to get on it. I'm going to get